Hello, everybody, and thank you for joining us, and welcome to another Expert Perspective session. It's my pleasure to welcome today Robert Ward from the Institute for Strategic Studies, where he's director and the first Japan chair, which is a significant achievement. Before joining the IISS 6 years ago, Robert spent 22 years with The Economist and being the editorial director of the Economist Intelligence Unit. So he's the best person we could think of to talk about geopolitics. So what we'll do today is go through his view of geopolitics, and he's got some great insights. And then we'll try and get on to what that means to practicing treasures and how you get the chance to affect your company's strategy. So clearly, we have seen a big change in the way the world works. Could you maybe take us through how you see this unfolding?
Yes, so there's a view out there that we're about to enter a new era and that Donald Trump is one of the drivers of this. My view is slightly different. That is, that we entered this new era probably around 2008 at the time of the great financial crash, and that Donald Trump is a symptom of this new era rather than the cause. And just to give you a bit of an illustration of what I mean, if you remember, the Financial Times has this wonderful series, Lunch with the FT, and one of their lunches back in 2018 actually was with Henry Kissinger. And I think this encapsulates where we are perfectly. He said, I think Trump may be one of those figures in history who appears from time to mark the end of an era and to force it to give up its old pretenses. It doesn't necessarily mean that he knows this or that he is considering any great alternative. It could just be an accident. So in those few words, I think you have the description of where we are. By the old pretenses, I think that is the international laws that the world was broadly governed by from 1945 until, as I said earlier, 2008. So we're now in a world, we've been there for a while now, where international rules are increasingly being ignored. Multilateral institutions are unable to enforce these rules, and you have great powers. And by the great powers, I would say the US, obviously, China, obviously. I would include Russia in that, even though Russia's more of a spoiler than a power in the sense of China and the US. And I'm not sure I would include the EU as a great power, even though economically it's obviously one of the most important areas on the planet. So we're now in a world of great power competition, spheres of influence, and where rules matter much less.
Thanks, but can I be the devil's advocate and say that Russia has demonstrated that great powers' ability to impose their will is maybe more limited than they thought? And the US hasn't exactly covered itself in glory recently either. So are there limitations to this?
Yes, there are limitations to this, partly because we're now in a world of multipolarity. So if you cast your mind back to the glory days of 1989, 1990, the fall of communism, China had yet really to take off. It was just starting. Soviet Union obviously had collapsed. It was in a unipolar moment where the US was the dominant power. Since then, we've had the rise of China, which has been the story of the last 20 years or so, certainly since 2001 when it entered the WTO. So the US now is no longer on its own at the top. There's China there. There's malevolent behavior from Russia, for example, which of course is creating difficulties. So because of this multipolarity, and because of the relatively evenly matched nature of the US and China in different ways, they have different strengths. None really has the world to itself. And so what you're seeing now with the volatility and clashing of these great powers is basically a struggle to try to decide how the world should be run. And at some point, the US and China will have to agree to disagree in how the world is being run. And when that happens, then I think we'll have more stability. But I think that moment is a long way off yet.
That brings us back to Xi Jinping's recent comment to Donald Trump, which I think most of us agree Donald Trump didn't really get, about what happens when empires end, or one is declining and one is coming up. That often ends up in armed conflict. Do you think that's a real risk here?
So the Thucydides trap, that was interesting because China is also now, I would say, at best economically plateauing, probably entering its maturing, declining phase. And this is normal. Like human beings, we're vigorous and energetic when we're young, like emerging economies are, like China was in the 1990s, early 2000s. And then we get older, we get slower. That's all part of how economies develop. So I think China is probably now on its downward trajectory in terms of its economic vigor. It doesn't mean, of course, that it's not a hugely important market and lots of potential there as well. But the growth era is now looking very different. But I suspect that Xi Jinping is also over interpreting what he sees as US decline, because the US, despite all its problems, continues to have a vigor in the private sector. It continues to be innovative, and it has very favorable demography as well, which is slightly different from the economic world that China inhabits. So they both have strengths in their own way, but I would caution, if Xi Jinping was on this call, I would caution him about writing the US off quite yet. And ditto for the US. I think the US needs to take China as a strategic rival very seriously. And there are some encouraging signs that that's happening. But I think, as we said, Damian, the other day, there's a lot of misunderstanding of China in the US and elsewhere. And I think the same may be true within China of the outside world as well.
If he was talking to you, I'm sure Xi Jinping would listen very carefully. But if we could just maybe spend a little bit of time on the misunderstanding of China, because we both like to think we have insights. I do think there's a lot of projection in the West now because we tend to go around colonizing places. We think that's what the Chinese will do. And in my view, that's not how they behave.
Yes, what is non-negotiable for Xi Jinping is what he sees as the return of Taiwan. So that's the really key geographical issue for him. There's also a few islands that Japan and China are disputing over. The Senkaku Islands, Japan controls them, China wants them. Plus, there's some border disputes with India and a couple of other tensions.
Some minor historical issues as well.
There are some significant minor historical issues too. So all within China's near abroad. I think the challenge, obviously, if Taiwan was attacked by China, that would be pretty catastrophic economically for the rest of the world. If you think about the sea lanes of communication that go through that area, the geopolitical reactions, if the US and Japan were to get involved, it would be a massive shock to the system. But I think the other challenge for the world from China is that China wants to influence the rules. And in areas that are new, advanced technology, internet, AI, quantum, and so on, they want to be rule setters. And that's not surprising because they're up there with the US in terms of economy size. But that, of course, means that China butts up against the US, which also sees itself as a rule giver rather than a rule taker. So I think you see the sort of geographical competition within China's near abroad, but also globally more, if you like, intangible competition with China trying to set rules in these new areas in particular. Plus, of course, you've got the Belt and Road Initiative, where Xi Jinping is aware of the mistakes that have been made with the Belt and Road Initiative, investment where there shouldn't have been, and so on. And he's trying to upgrade what he's doing on the Belt and Road Initiative. And also, I thought significantly, he said a couple of years ago that he wants to use the Belt and Road Initiative as a conduit to roll out Chinese standards and rules and norms and so on. So I think this is one of the areas going forward to watch.
Okay, and by the way, my own view, I would share the Chinese view of the world, which is that given that they have invented a lot of this stuff and they are a very large historical country, both historically and today, they actually have the right to these things. And we may not like it, but we need to live with it.
Exactly. And that takes me back to my earlier point. At some point, the US and China, if they're going to get greater stability, will have to agree to disagree and just agree to divvy things up in the way that the Soviet Union and the US did ultimately from when détente started in the 1970s. You have to have some kind of agreement about this. But China wants to challenge the US in what it called the fourth industrial revolution. Xi Jinping's been, and Chinese government's been explicit about that in these new tech areas, as I said, AI, quantum, semiconductors, and so on. So this is why I think the US feels that this competition is strategically important to try to prevail in.
And frankly, they're right, but equally, I don't think you can tell the Chinese they're not allowed to do this. Now, the other thing which I think a lot of people tend to misunderstand about China is that we think of it as one big monolithic block where everybody agrees and everybody does what the boss says. I think we both know that is not the way China works at all. And in fact, one of the biggest concerns for the Chinese government is staying in power.
Exactly, yes. And I think that is reflected in some of the things that we've seen recently. For example, the purges that have been going on in the name of anti-corruption for a few years now, centered on the People's Liberation Army, senior people being removed there. The disquiet that there was when Xi Jinping moved to abolish term limits last decade. So yes, he is constantly having to watch his back as well as run a very difficult economy now, which I said is showing a lot of the signs that you see in the more developed economies, say in Japan, some of them in Western Europe as well. Running China, he's sitting at the top there and obviously very powerful, but I don't think he necessarily has it all his own way.
Yeah, there's always intrigue going on. Let's move to the US right now because you mentioned the weakness. The obvious one is in the economy. There are these massive deficits. Now, we talked the other day, I'm more of a hawk on the US dollar and the US economy than you are, but my view is that at the end of the day, the dollar hegemony at some point has to come under threat. The question is, when is that going to happen? And this is simply because you've got these massive deficits. And at the end of the day, people who are investing in the US have to start asking, am I going to get my money back?
Yes, the problem for the rest of us, I think, is that the US and China are tied to each other in a symbiotic economic relationship. So China runs these enormous surpluses, current account surplus and goods trade surplus, and the US runs large deficits. China saves too much, and these savings are channeled out of China, and the US in aggregate saves too little, and the flow of cash is from the surplus country to the deficit country. And so these two, because of their scale, are tightly interrelated economically. So the only place big enough to absorb the sort of scale of funds that are coming out of China is the US. And if you look at the size of the US Treasury market, for all its problems, it dwarfs all the other government bond markets by a long margin. I think the Japanese government bond market may be the second biggest, gilts maybe third biggest, bunds from Germany fourth biggest. But add these together, and they're still not nearly as big as the US Treasury market. So the US has depth and liquidity, and so China's recycling its surpluses primarily into the US. So I think unless you see a big change in Chinese domestic economic policy in favor of boosting private consumption, and there is a lot of potential to do that because of the money that's sloshing around inside China. Unless that happens, and unless you see a turnaround in the US in terms of its fiscal position, and US budget deficit is just enormous. The UK is pretty bad at 4% of GDP. I think this was about 7% the last time I looked, which is pretty eye-popping. Households and corporates are net savers, but the problem is the dissaving by the government, which outweighs what households and corporates are doing. So unless you see changes in both of those, this symbiotic relationship will just continue. So even though you will get some sort of nibbling away at the dollar to the benefit of the renminbi, perhaps the benefit of the euro, I don't think overall that the dollar hegemony is under significant threat. And I would say for the rest of my professional life, so another say 10, 15 years, we're just not there yet. The problem is the global economy is constipated because of Chinese capital controls as well. They're leaky, so money does get in and out for all sorts of ways. But for such an enormous economy to have capital controls and to seek to control the currency, which for the Chinese government is a political variable as well as an economic one, it just gums up the system as well and prevents more rapid adjustment. That may not be a bad thing if rapid adjustment leads to too much volatility, given the size of potential flows in and out of China. But it does mean that we're stuck with this system where the dollar is by far the most dominant currency.
Would it be fair to summarize it as saying it's the old adage, if I owe my bank $10,000 and I can't pay, I've got a problem. If I owe them $10 billion and I can't pay, they've got a problem.
I think so, and particularly with regard to China-US friction. So I remember the Japanese back in the 1990s when they were getting one of their sort of periodic bashings from the US. The Prime Minister in the 90s, Hashimoto Ryutaro, he had been finance minister. He said, well, if this goes on, this bashing, we're going to start selling our treasuries, because at that time they were the biggest holder of treasuries in the world. But then everybody said, if you do that, it's like saying, if you don't do what I want you to do, I'm going to shoot myself. It has no effect whatsoever because people know you're not going to do it. And similar for the Chinese as well. If some problem with Taiwan, for example, and China says we're going to liquidate all our treasuries, it just becomes a downward spiral and a destruction of national wealth. Changing Chinese renminbi into US dollars is one channeling of Chinese national wealth, so it wouldn't do China any good at all.
Okay, so if I can summarize, would I be right in saying that you think that the US and China will have to resolve their differences more or less amicably or more or less peacefully?
That is what the rest of the world would hope, yes. That is the desired end state. The issue is that we've got a lot of sort of blood to go under the bridge, if you like, between now and when this happens. They're evenly matched, and so they can continue to try to jostle for global predominance for quite a long time yet. And there are some unfinished sort of strategic things as well, which could cause a lot of damage en route. And of course, what happens to Taiwan being one of the most important of these.
And of course, there is the Taiwanese own view of the subject, which is a whole separate topic. But where does this leave smaller countries? Not necessarily particularly small, but thinking about European countries, for example, plus places like Canada and so on.
Yes, and places like Canada, and then Japan, and then South Korea, and Australia in Asia as well. It leaves these smaller countries quite exposed on their own because the international rules-based order, which was pretty leaky, let's be honest. Superpowers of old, the US has ignored the rules-based order when it's wanted to, and that's part of the privilege of being a superpower. But for the rest of us, without rules to protect and to at least provide some guardrails, it leaves us exposed, and it leaves the rest of us also needing to club together. I think this is one of the key lessons that the governments need to draw, that actually in aggregate, the middle powers and the global middle powers, by which I would say Japan, Germany, UK, France, are enormous in aggregate. Places like the EU, countries like Japan, as well, they have agency when they work together, and they can navigate between the US on one side and China on the other. So I think that sort of clubbing together becomes even more important, because if you're a great power, you don't really have to look at what's underneath you. You'll be like two elephants fighting, and of course what gets squashed is the grass under the elephants, which is the rest of us. So that's why we need to club together. I think that becomes more strategically urgent.
I get that, but one of the things that Donald Trump has done is to make everybody aware that being dependent on the US is not a good idea.
Yes.
And so
Yep.
you are now seeing an awful lot of people moving to make both their military systems and their economic systems and financial systems much less dependent on the US, where there was an inbuilt dependency. Do you see this going forward having a significant impact?
So just for the record, I think the tariffs won't work. They'll just shift production to places at a lower tariff, but that won't cut the US goods deficit. But what they have done quite effectively is force all the countries to negotiate bilaterally with the US. So the WTO, absolute silence from them. Ngozi Iweala, very formidable former Nigerian finance minister, very formidable indeed, intellectually brilliant, has had absolutely no voice in this current trade turbulence. Trump has forced all the countries to negotiate bilaterally with him and then to celebrate their bilateral deals. And of course, every time that happens, that's another nail in the coffin of the multilateral system. So I think what you will have going forward is a continued dependency actually on the US market, because the world's most important economic actor, it is still the US consumer. And so I think you'll still have that market being important. But of course, if you're China and suddenly you're finding it more difficult to export to the US because of all sorts of economic security rules and so on, China's needs to keep exporting to keep its economy going. So as you're actually seeing, you'll see China looking itself for new export markets, i.e. at the moment in the EU, because that's what the richest market outside the US in aggregate. And then that, of course, causes more trade friction. You may see some more activity in the global south, although I suspect that's not really going to be where the action is in terms of the size. So you're going to see a reordering of the global economy between the US, of course, and then the China on the one hand, and then the EU on the other hand. The EU is caught at the moment between China and the US. And if you look at German trade data, you'll see that it's deteriorating for Germany in terms of its relationship with China. Growth in exports to China is slowing, but imports from China are going up, and that of course affects some of Germany's most strategic industries, such as automotive, steel, chemicals, and so on. It's difficult to replace the US as an important market. It's difficult to take China out of the economic system, as some want to do. So we just got to live with what we've got, but I think it augurs for more tension.
And if you don't mind, this has been great. Thank you very much. I'd like to move on to what this means for treasurers. But before we do that, would it be fair to summarize your view as being it's messy, it's going to get messier, but at the end of the day, the fundamental architecture is probably not going to change very much with or without the rules. You've got the economic masses and everybody's got to live with them.
Yes, so the need to be in these big markets, I think, will remain. However, you have the increasing importance of economic security in national policy making, and that will make it more difficult to do business in the old way with countries like China, for example. So in areas like tech or quantum, or those areas that also have a sort of dual use applications, so military and civilian. So that means I think you're going to see a reordering of the global economy over the next sort of 5 to 10 years. It's underway, actually. If you're a Western company in China, you're going to have probably a for China unit and then a rest of the world unit, or you may actually now need a for US unit, given all the sort of regulatory changes that are coming out of there as well. So the sort of splitting, not being able to include China in the sort of the whole business management, but you also have, I think, a sort of shortening of supply chains. So whereas in the old days, pre-2008, you'd have supply chains stretching right over the world, this sort of hyper globalization era where it was all about efficiency. Now you're going to have to build in redundancy and resilience, and that means shorter supply chains. If you're a European company, keep the supply chain in the EU, probably you've got greater security there. And that, of course, means a different way of looking at your risk and at your ability to deliver profits as well.
Thank you. This is great advice for treasurers. If you don't mind, I'd like to come back on the different points that you've mentioned. The first one is obviously for working capital. The big adage today is we move from just in time to just in case. So if you look at all of these shorter supply chains, in theory, they should lead to less working capital, but in fact, they will probably lead to a lot more because you're going to have a lot more inventory in different places. So would I be right in thinking that you're saying treasurers have got to be aware that they're probably going to need to fund a lot more working capital?
Yes, it's all about resilience and redundancy. In the last 6 years, what have we had? We had COVID pandemic, we've had Russia's full-scale invasion of Ukraine, we've had the tariffs, and now we've got the Hormuz crisis. What these crises have all shown us in different ways is the importance of having redundancy in the system. And I think the de facto closure of Hormuz has done that for a whole range of commodities now. So we all thought it was just oil that would be affected, but no, it's helium, it's sulfuric acid, all sorts of other things that affect everything from farming to the medical industry. So I think that is another wake-up call about the vulnerability of the global economy to these shocks and the need, as you said just now, Damian, for inventory building, stock building. If you think about countries, they're not just companies, those countries that have done best out of this are those that have diversified their energy sources and also those that have had the biggest strategic energy reserves. So China, for example, has managed to sail through this relatively unscathed, not completely because inputs have gone up in areas like construction. Japan as well. I was there the other day and petrol prices have barely changed because the government say been able to cap the prices and draw down on its strategic reserves. So if you translate that into what companies need to do, again, yes, exactly as you say, it's all about having the sort of buffer to manage these unexpected shocks, which are coming more frequently, by the way. In 6 years, we've had 4 major ones that are historically large. There's no reason to expect we won't get others further down the line.
They seem to be business as usual now. Leading on from that, you're probably going to have a lot more local manufacturing, which is going to have a consequence for capital budgets. It's also going to have a consequence for cash management because a lot of the more global cash management processes ride on the back of these global supply chains. Once you end up with a local manufacturing unit, it becomes a lot more difficult. So again, would you expect people to have to A, fund a lot more capex, and B, find themselves with a lot more local cash pools?
Yes, I would. And as an adjacent issue to that, particularly in Europe, you're getting more competition for investment, I think, from defense spending as well. So there's competition for the resources, there's competition for people as well. I heard a story the other day about a German rubber factory and the defense company looking for rubber specialists, and they just came in and just took all the employees, gave them the high money and took the employees. So within Europe in particular, you've got the need to shorten supply chains, but you've also got a lot more spending needs to be deployed amongst the existing resources. So I think there are particular challenges there for some of the European countries.
All of this happening in a period of fiscal constraint.
Exactly. And as we found out with the UK, I follow the GCAP, Global Combat Aircraft Program, which is this amazing project to build this future aircraft fighter between Japan, UK, and Italy. And the country that's causing the problem within this trio is the UK because they can't find the money to meet the obligations. And that is extraordinary given that for the UK, this project alone is bang on strategic need in the sense it allows us to diversify a bit away from the US. It creates jobs in the north of England and it allows us to deploy our technological advantages. And the fact that we can't get our defence investment plan up and running is emblematic of problems in the UK, obviously, but also, as you said, Damien, more broadly as well. There's a need to do more across more areas, but with less money. That's difficult.
If I can come back to the thing that you said at first, which is probably the need to split off entities, that is something I've heard before and I've actually seen. I'm not sure that's on many people's radar. Would you like to maybe expand on that?
Yes, it's something that I've seen in a number of Western MNCs, but I also see it a lot in Japan.
And I've seen it in Chinese MNCs, by the way. But come on, carry on.
Chinese entities between China and going abroad.
If your home country is China, you're looking at the US and saying, maybe we need to.
Yeah, exactly. So you need a for China division and a for the US division, and then for the rest of the world division. You might at some point need a for Europe EU division as well, given the divergence in views on data flows, for example, and so on. I'm seeing this a lot. And partly it relates to the issue of data flows because China has its data sovereignty policies, anti-espionage policies, but you may be a multinational company with millions of customers, but you can't get that data out of China because it's part of China's sovereignty push. You've got India as well, which is worrying about data colonialism with AI. The size of data sets is important, and India clearly has a lot of people. So India's worried about that. You have differences between the EU and the US in terms of how they look at data privacy, for example, as well. This all sort of flows into the kind of fragmentation narrative where markets used to be borderless and now they very much have borders, and you have to start thinking more market specific as an MNC rather than being able to look at the world as one thing.
And I suspect riding on the back of all of this, we'll probably see exchange controls at some point.
Exchange controls from where? From the euro?
Just generally, obviously, there are countries which still have exchange controls, but we have been in a period of massive liberalization. I suspect as we go down this path, you're going to find that people are going to start maybe wanting to control their currency a bit more.
Interestingly, with the focus on economic security, which I think will hit all private sector companies increasingly, in Japan, they've got a long history of economic security thinking. So the government and companies, the communication is really tight. In the UK, US, Netherlands, other countries, economic security is becoming increasingly important for the government. And it's around all sorts of things from healthcare to education to tech. And within that, one of the interesting developments, which kind of speaks to your point, Damien, has been the floating of outbound investment controls. So inbound, it's fairly obvious. In the US, you have CFIUS that's sort of vetting all the inbound investment. If you're a Chinese company trying to invest in a port, for example, or a semiconductor factory, you may get refused. But also in the last couple of years, you've seen more about outbound controls. That is interesting because in that sort of history of liberalization of the global economy that took off, I suppose, after the late 1980s, but particularly after Soviet Union fell, capital had been free basically to go wherever it liked, out of countries. But that, I think, will increasingly come under strain, particularly if Sino-US relationships get more tense. So something to look for, because that will be a big shift in global capitalism and capital flows.
What I take away from this personally, and I think it's a message I would like treasurers to take away, is now is probably the time to start having a very difficult budget discussion with your CFO. Because if you take A, more working capital, B, more CapEx, C, a lot more local supply chains, D, the need to start splitting up your legal entities, and E, probably a lot more difficulty managing currencies. All of this says that the extremely lean organizations that treasurers are proud of are probably not going to be sufficient. So you're probably going to need some investment in resources, manpower, systems, which typically CFOs are not that keen to. Would that be a reasonable summary?
Yes, it would. And I would add to that that effective geopolitical due diligence should be seen as a source of competitive advantage. I remember when I was at the Economist Group in the boom years, 2001 to 2008, we covered political risk for, I think, nearly 200 countries. And when I would talk about political risk to some of our clients, they'd roll their eyes and say, yeah, whatever, but we're still making a lot of money. China's growing at 15%. I think if you fast forward to where we are now, geopolitical risk should be a subject discussed in the boardroom. There should be development of expertise on geopolitical risk. That Trotsky quote that we were talking about when we spoke the other day, Damian, you may not be interested in war, but war is interested in you. When Trotsky was paraphrasing Pericles, and I would paraphrase Trotsky by saying, you may not be interested in geopolitics, but geopolitics is interested in you. So to try to think within everything that you've just said, Damian, but also overlay the importance of geopolitical due diligence for the C-suite, because that, I think, will mark out those that do well in this world. And there's a lot of money out there, a lot of areas that are really promising, but the geopolitics will keep poking its nose in because we're in this period of bigger structural change in the way that the world is run.
And if I may, I would add a bit of real home wisdom, which is don't wait for it to start raining before you buy an umbrella.
Absolutely,
which
spot
is
on, yeah.
What companies. So I think there is a key message here, which is engage your CFO, engage your board, and make sure people are thinking about these things. And by the way, you're absolutely right. The typical reaction is, yeah, it's all okay for the time being, so who cares? And the answer is, you've got to care now. By the way, obviously, we don't get involved in advertising or anything, but clearly your organization is always willing to help people should they wish to get in contact with you.
Absolutely, and welcome any questions that anyone has about what we've said.
Really appreciate your time. I've personally found it very interesting and enlightening, and I hope treasurers take away a message: you need to worry. Thank you very much, Robert.